Yo, what's going on, y'all? J Trades here, back in a brand new video, and in today's video, I'll be going over when you should trade and when you should not trade. And this is completely dependent on the most obvious, which is your session, right? If you're trading Forex, so you know we have London session, New York session, and then the relevant Asia and Australia session, okay? So obviously those two are pretty relevant. I would mainly focus on London session, New York session. You obviously gotta be trading in the right session, and we want to be trading during high volatility hours, okay? And you guys can look up the high volatility hours. I will tell you guys right now if you guys really are interested. The volatility hours depends on what asset you're trading, okay? So that's something you guys need to dig into, look into charts, look at key times, and basically see what times for what asset you're trading are active hours that fit into your own schedule. You want to be trading when there's high volatility, high volume. This gives you your best spreads, which is extremely important, especially when you're scalping with tight stop losses. You don't want to get stopped out too early. You want to get the best fill, as well as just in general getting these big, nice risk reward moves. Okay, if you are trading when there's very low volatility, most often than not, you're gonna get these very small and tiny consolidating moves, and it's just very boring, and no one wants to sit through it. Times of consolidation, right? Everyone wants these big moves and secure profits. So therefore, basically, of course, time of day in session and basically volatility is the first things you should be looking at. Now, the thing after that you should be looking at is also extremely important. I'm getting straight into this video, okay? And that's gonna be basically market conditions. Now, this is something that you could say comes with more experience. The more experience you have, the better you're able to identify what is a valid and good market condition, what is not good market conditions for your specific strategy. For my strategy that I teach in my course, I know exactly what is considered good market conditions and what is considered bad market conditions. This way I can amplify my wins and understand when I should trade and when I should not be taking a trade. So, for example, I'm going to mark out you guys a clear example of bad market conditions right now. This right here from 8 o'clock, this is even during session too, right? First off, if you want to identify, are we during the right session? Yes, I am during the right session. This is high volatility session hours. So this is a valid area I should be looking at. Now, look at the problem with this price action here though. Once I start seeing this in the first few hours, I'm just not looking at the chart for the rest of the day, or at least during this session. Why? Because market conditions are horrible. You guys can see this is on the 5-minute time frame. The 5-minute time frame should be looking smooth. For the people that are scalping intraday, 5-minute is a great, excellent time frame to be looking at market conditions on. 1 minute, I would say, is not the best because 1 minute you could have moves going up and down within minutes, and it may look extremely clean, but on a higher time frame over a period of time, the moves are actually looking like this on a 5-minute, extremely choppy. On a 1 minute, this could be looking very smooth, but when you go on the 5-minute, this looks like a lot of chop. And basically, this makes it so you get stopped out so many times too often. You just can't. It's just hard to get very precise entries when prices move like this. Okay, choppy price action, and of course, you can tell hindsight is going downwards. But if you're looking at this real time, you have no clue if it's going downwards or not. Okay. You have no clue where price is actually heading to. So this is considered very bad market conditions. When we have extreme chop like this, we need good clean movements. This is a perfect example right here. Great market conditions right here. This is not even during my session. This is literally Tokyo session. I don't trade during this session, but look at what you got here. This is excellent market conditions right here. Even here is pretty good. You could be trading this as a demand zone, supply zone if guys really wanted to. I wouldn't trade this supply zone because it is below. This is basically in discount. I would be trading that supply zone, but nonetheless, this is a perfect example of great market conditions. When you see something like this forming previously, you can expect clean moves right after. Now, when you see something like this right here, all of this accumulation, like this here in the middle of nowhere, as well as just like nasty price action going on previously right here, it's just not clear. It's not strong, does not give great conditions. You can expect it to be followed by bad market conditions. So you can kind of even see these things ahead of time depending on how price action was moving previously. Because how price action moved previously basically gives the market like resistance and support levels, and there will be all over the place, which creates this choppiness. Okay, orders gonna be all over the place. People gonna have orders everywhere. There's no concise area how pricing can move. So this is an example of clear direction bias. Clearly price is going up. Price went down very clear as well. There's no chop when we're going down. This is horrible. We're chopping up and down to come down here. For a move down, I want to see something clear. They're like, this is solid right here. That's a solid move. This is even better. This is clear as day that's going down. Again, we want these fast moves of high volatility, high volume that are very clear. Very good move right here. This is also very clean. Again, this very clean move up as well. This is very good market conditions. Now let's see and identify another area of good and bad market conditions. So let's see what we see real quick. I'm just do something real quick. Okay, so I would say right here, from here to here, and from basically here to here, excellent market conditions going up and down. When you see price going up very clearly, it's gonna make a very similar clean move going down. Okay, excellent market conditions right here. This is great. This is what exactly what we're looking for. Okay, great market conditions. Now, bad market conditions again would be like something like this. This is even during session too. This is horrible. Like the fact that the price is moving in such a tight range, giving very minimal opportunities for us to trade in. Now, of course, if you have very high or big stop losses, you can definitely trade this. But me personally, I don't have stop losses that big. I like to get sniper entries, and you just can't get a break of structure or fair value gaps or things like that, especially when price is chopping around like this. It's horrible, right? So that's bad market conditions, okay? Again, excellent market conditions right here. As you can see, clear indication, even live right now, market is going to be pushing up. And I do think gold is going to continue pushing up all the way above here before we see further resistance and even potentially clearing all the way back up here. We'll see what happens. But that is an example of great market conditions. Now let's go to one more example, okay? This is a perfect example right here. This is on the 15-minute time frame. Even the 15-minute time frame can roughly tell you. Like this move right here we previously saw, it looks clean on the 15-minute. Now, this does not look that clean on the 15-minute, okay? This right here, another example, bad market conditions. Horrible. Price is barely ranging, barely moving. Horrible market conditions, okay? This is a really good market condition right here. Clearly going down, clearly going up. Very nice moves. Again, it has some accumulation here. You know, as from this video, you guys can clearly tell when we have good market conditions, when you should be trading, when you should not be trading. Like this whole place right here, excellent market conditions. Very clear and concise moves. Very, very clear indication of where the market is gonna move. Something like this is not the best. This I don't like, okay? This is things you want to be avoiding. You want to be avoiding when you see price moving like this. I'd rather wait until we have a clean state of price action. Like when I see this, I'm not gonna trade this, okay? I'm just gonna wait it out. Once we have indication of a clear move, that's when I'm interested in looking to trade market again. For example, we got a save supply zone right here, something like that, okay? So that's gonna be it for today's video. If you guys did enjoy and learn a lot, if you guys did enjoy, make sure to leave a like, comment, subscribe, and I will see you guys in the next video. Are you a day trader looking to get funded with 6 figures of capital or wanting to become a full-time profitable day trader? Well, look no further. At ETU Essential Traders University, that is exactly our main goal. We're here to teach traders of all skill levels the understanding and skills needed to become profitable in these markets, and we also offer many different services like a full comprehensive day trading course that goes over A to Z on everything you need to become a successful trader, as well as a premium Discord membership that gives you access to our private community of traders and day trading signals. If you're really dedicated to mastering this craft, we also offer one-on-one private mentorship lessons for those looking to speed up their profitability to journey, and as well as answer any specific trading related questions that they are facing. So now visit essentialtradersuniversity.com to enroll in the day trading course and secure your spot in our premium membership community. Let's embark on this exciting journey together and make every trade count. And I'll catch you on the trading floor.